The 8 factors that drive business value. The factors that business valuation professionals consider. Industry guidance on the valuation of privately held businesses is fairly consistent worldwide. In the United States, guidance is provided by IRS Revenue Ruling 5960, while in Canada, it's outlined in the Canadian Income Tax Interpretation Bulletin IT 71R3. The UK and other regions follow the International Valuation Standards issued by the International Valuation Standards Council. Industry standards broadly agree on 8 factors to consider when determining business value in private or closely held businesses. The first factor to consider is the business's unique attributes. Valuation professionals look to develop a perspective of the business operations, the length of time it has been in operation, and its history of success or failure. The second factor to consider is the overall economic environment and conditions in the industry and market in which the business operates. For the third factor, we form a perspective on the business's financial condition, incorporating information gained from a review of its profitability, cash flow, and balance sheet. For the fourth factor, we form a perspective on the future earnings potential of the business, informed in part by our understanding of historical financial performance. We also look at expectations around future performance and related contributory factors. The fifth factor to consider is the dividend-paying capacity, or ability of the business to make distributions to its shareholders based on its current and expected future financial condition. The sixth factor to consider is the value of the business's intangible assets. Intangible assets may include reputation, customer base, intellectual capital, unique positioning, relationships, and other factors that may not be seen on the balance sheet, but that do impact value. The seventh factor to consider is sales of stock and other securities in the company, examining the prices at which shares of the business have been sold in the past or are currently being traded, and paying particular attention to buy-sell agreements and other pricing mechanisms in the corporate documents. The eighth factor to consider is the market prices of publicly traded companies in the same industry or market, ideally with a capital structure comparable to that of the subject business.